Hello, 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 everyone. Happy Wednesday. How's everyone doing? Good morning, Dean. Good morning, Patrick. Good morning, John. Thank you for putting in everything when you can, Sterling. I hope you have a wonderful vacation. Again, lots of earnings. Pretty much a beat by most things. Although ASML guided a lot lower for third quarter, so that's why it's down. So you can look through there. Johnson Johnson beat. Goldman Sachs beat. Prologis, that was a misbeat actually. Uh, Morgan Stanley beat. PNC beat. Progressive beat. What else? Bank of America beat. So there's your theme for today. Yeah, they did. They're doing well. They do have lower revenue. A lot of it is lower revenue. So stuff's been dumbed down. They're missing on dumbed down uh, earnings. And I pay more attention to revenue than EPS, by the way, because you can't fudge revenue. Good morning, Jacob. Good morning, Tony. Good morning, Jake the Snake. Good morning, Rick. Again, good morning, people in the background. Good morning, Heinrich. How are you today? All righty. Halfway through the week already. Turn 2 posts. Well, I appreciate the 4 posts. It doesn't matter, Sterling. Thank you for chiming in. All right, we have mortgage stuff out, and that's going to keep climbing going into next week again because of the 10-year. PPI coming in flat, down from prior, down from consensus, and flat. So, no bump in the PPI. Year over year coming in 2.3, down from consensus 2.5 and 2.7. So the PPI not showing much inflation, well, not showing any inflation over the last month. What else we have? We got Hammock speaking. We got Barr speaking. We got industrial production coming out in about, 9 minutes? We got EIA numbers after crude pulling back again. We got Fed's beige book today. Tomorrow, remember, we have retail sales and unemployment numbers. Hello, Charles. Rick says Jamie Dimon is good. Good morning, Anissa. So that's where we sit right there. Market today. Let's do a quick little refresh. I hadn't refreshed after the PPI. You can see some of the semiconductors, applied materials down, KLAC down. Other than that, your mega caps are mixed to slightly up. Your banks, breadth was horrible yesterday. Breadth was actually horrible, and if you didn't have like Nvidia and a bunch of the semis all running yesterday, the markets would have been really ugly, especially Nasdaq. There's your Progressive up 4% on earnings, J&J up 2% on earnings, but overall a positive tone to the market this morning. You can see everything positive in the day after yesterday's sell-off reversal. Fed Watch still has 97% for the pause, and then it's getting closer to 50-50, 52-46 for potentially another pause in September. And keep an eye on that one. We're out of extreme greed, but still at the upper end of greed after yesterday's pullback. PE still running 38.03 on the Schiller basis. After close today, we have United Alcoa, are probably the two biggest ones. And then tomorrow we have TSMC, PepsiCo. Those are probably the two big ones tomorrow morning. And Netflix after close tomorrow. Good morning, Harold. So what am I looking at now? We had a sort of a bearish day after eking out new highs, closing down. I was watching for key reversal days. We did not get one yesterday. Still watch for that, but today now I'm watching. We've bounced off a very key level. Key support area, this 62, 63 to 65 area. Very key for me. We bounced off of that, broke through that with the PPI numbers. Now, exactly, we've already hit the 50% harmonic, which is what I was watching, came in at 6,300. We start plowing through that today. This is a clear path move. If we remain the positive tone for today, I'm watching 63.10. We close above there, then my next target's higher, 63.21, and nearly the end of the clear path move, 63.32 to 63.35. Very strong resistance up here. So that's where it is on a bounce. If we do pull back, keeping an eye on the 62.90 to 62.92, we break through there, 62.78. The bigger picture still, we got daily cycles trying to bottom and in a horizontal channel. The only way I can start getting negative, more negative on the market, and we still are at major cycle tops on the weekly. We managed to break above last week's high, but again, I was only looking to follow through with stuff if we maintained a close above there, which we did not. We got major selling pressure before that ever happened. So the only thing that I can start watching, though, for the rollover play is we start getting momentum below about this 62.60 area, 62.63 area. We start getting momentum. Then my targets, because it's into a clear path move, and we don't have a double anymore. We have a horizontal channel. Remember, the move actually on Monday canceled the potential double. So we start getting below the 62.60 area, 62.63 area with momentum. I'm targeting the bottom of the daily rotation zone, and then if we break through that, my major cluster, I have 6,200, then 6150 areas, 6155. Those are my two targets downwards if we can manage to break. We have not yet, so I'm still watching for the continued bounce play today, dovish PPI, and most earnings were beat. Again, for me, intraday, this 63.10 level is going to be key to continue this bounce move, because this is the rollover zone between 6,300 and 6,310. I should say potential rollover zone. We're not even to a topping pattern. We just had a minor reaction there. NASDAQ, again, for that, we're back above a very key level. I was watching this 23,050 area. So based off the harmonics now, we spiked just above this 23,076, 50% harmonic. On a continued rally, it's 23,112. We start closing above there. I'm really focused on 23,140 to 23,149. Above there, I'm looking at 23,186. Pullback at this point is about 23,30. We start breaking below that. We really, again, you see this spike reversal right here, which actually was a 4-hour %B buy. 4-hour %B buy. So even though we're into a clear path move, it gets challenging in here because I can't really start getting bearish until we get below 22,971 at least. Other than that, still pinned to the top, very overbought. Yesterday also we spiked above last week's high but did not close above it. So I'm still paying attention to last week's high, but we got to follow through with at least a daily close above that. Also, remember, I haven't talked about it. We have option expiration, July option expiration this Friday. So that makes it interesting. We could stay in this range in the S&P and a slight up move into Friday, unless we get something wacky with the numbers tomorrow. So that's what I'm keeping an eye on. There's still this upwards buying pressure. I think we're somewhat setting off for a blow-off top at some point. Dow did trigger what's turning into a channeling double, almost to the first target. But again, the channel's starting to take precedence over that. I'm actually revising the channel downwards a bit. It fits better now with the upper end. So on any rally, the key things I'm watching, breakdown is about 44.5 on a Dow rally, and then we're looking closer to right about 44.782. I want to see how the harmonics fit. So 44.635 on a continued move up is going to be very key for me. And then 44.770. Those are the two levels on a continued rally I'm looking for before rollovers. Especially, I'm not actually looking for the Dow to take out highs unless it blows through the top of this channeling pattern. Russell yesterday was an outside day key reversal. The Russell, the small caps got slammed. So the Russell hitting the bottom of the rotation zone. We break through the bottom of that rotation zone. My first target is 2187. We continue below that. Then I'm looking back to about 2150, 2151. I'm really paying attention to Russell. But today, on a continued bounce, if we can take out 2238, my key target is 2249. VIX, a little move up yesterday, but now already reversing that entire move. We still got volatility selling in here. So we really start grinding down below this 1675 level. I'm going to watch for a continued rally. Could be a choppy rally, but I'll look for that. DAX, we did not trigger the percent B yesterday. Only broke above it briefly, but this has, let's take a look, has set up a potential double bottom. So that is what I'm now watching. That is about the only thing that will get me bullish short term. We had a little 4-hour percent B buy that's already triggered, but it's got to follow through at 24,391 on a closing basis. Okay, because this will also be a rotation zone buy at this point. So I'm paying very close attention. Why does this work? Well, even on the daily, which you see the double, the first and second targets are within the move that started it, and the 4-hour, which the double completely works on, you have all three targets within it. So for me, if you want to be super aggressive, you can do it on a 1-hour. It would then have to follow through on a 4-hour close for me. So that's what I'm looking that. Can't not get bearish on this, though. It's sort of in neutral territory right now, besides that little 4-hour bounce play. But if we then turn around and take out today's low, then I'm looking for a much bigger pullback in the DAX. The yields, after a key climb yesterday, closing above the 62.5. So even on a pullback, I mean, we got some dovish PPIs, but the yields were already pulling back. Even on a pullback, I'm still watching for higher for longer yields. So any pullback, even to the daily rotation zone, I'll be looking for. We got yields at the top. So it would not surprise me to at least see a pause / pullback in the yields before another run up. The only thing at this point that would make me really pause in the yields if we start closing back below about 4.4, 4.38. 30-year closing above 5 yesterday, pulling back just below 5% now. But again, another close above 5. More importantly, the 62.5. So I'll be watching for pullback and continue plays on yields climbing on the longer end of the curve. What else? Hold on one second. There we go. Let me get back to the chats. Who else well, Wednesday's not always choppy. Dark stream. And that's why I suggest tracking your trading results, because some days are better. I found Fridays are my worst day, period. Oh, hold on. Jake, you did not. See, I forgot. I was a little busy this morning. Hold on. Here we go. I am back, but more importantly, the pets.com sock puppet. There we go. The pets.com sock puppet right there. That's what this market's reminding me of. So, that does not mean it has to stop, but thank you for reminding me, Jake. All right, we'll get to other stuff. Gold, still nothing. I'm watching for a minor bounce play at the bottom of this channel right now. Very minor. That's just super aggressive. Nothing bigger term. I will be looking for another potential pullback entry in silver, but it's not there yet. Copper, nothing yet. But we could be setting up with the rising 8 It now, copper has to start really breaking above about 563 for a breakout play with the rising 8. Dollar index, big move yesterday. Closed above the 62.5. Already tapped out to 75 yesterday. Now, any pullbacks, first cross rotation zone, we are at cycle tops and very overbought. But pullbacks, I'll be looking for definite continued long plays in here. By the way, we are into the weekly rotation zone. So again, I would not be surprised to see another pause / pullback at some point, but then I'm going to be watching for continued long dollar plays. Unless we really start smashing through this downward, this upward sloping trend line. Euro, yesterday we broke below. Euro's now in neutral mode on the daily, so I'm going to be watching for rollover plays in the euro. Okay? Rollover plays in the euro. And we could get a bounce coming in the next few days, but then it'll set up for rollover plays, and we could really, euro's gone for quite a long time. And look at it on the monthly. I mean, you could easily, over the next couple of months, return to the 111 area. So I'm going to be keeping an eye close on the euro. The secondary reaction is going to be very, very key. Yields pausing in Japan also, 40-year coming back, 10-year coming back, but again, 10-year we gapped up to new recent highs and reversed. Now I'm watching to see how much it pulls back right there, but I expect those to keep climbing also. The yen, a little pause right here at the 50% harmonic, prior 50% harmonic. That's from this one. I'm going to flip these around. Flip these around. My key target, I'm watching for still continued moves to this 149.70 area. That is my first target. We get through that, I'm looking for closer to the top of this channel and the 62.5. So on any pullback, still looking for weakness in the yen and long setups. The spiders, just like we had nearly an outside key reversal day yesterday. It did not get a close below Monday's low. But separate from that, the potential double's not off the table yet. Although for today, I'm doing the same thing with the S&P and looking for key harmonics. 625 and then 625.72 is key for me. The NASDAQ again, which continued higher. The double was already off the table. I'm using essentially these harmonics for the NASDAQ and looking at a 557.36 area. We're trading almost there. Above that, 558.50 and then 559.65 are the key targets on a continued rally. Bitcoin, basing, letting the 8 catch up, so I'm now watching for a potential breakout play above 119.900 in the short term. What else do we have? For teaching purposes, there's great looking daily potential top in APA. There is. Against the 200. Against the 200. Coming in, a dividend coming in. But that is a completely valid double top. Against, it has not triggered. Has not triggered. I want to see how that looks in the weekly. All right. And by the way, based off that weekly, I'd be focused a lot on that second target. But thank you, Sterling. That is a valid potential double top. Again, not one I'd front run. That would have to trigger. I'd actually watch for a trigger with cycles still going down and then a bounce pattern to possibly get in that one. URA, we'll take a look at it. Oh, good morning, at David. I got to say good morning to David. Then Rick, we'll look at URA. Well, not United Airlines. I was like, that's not uranium. So the double never triggered yesterday, invalidating the double. It confirmed but never triggered. Held the rotation zone and rotated up really nicely. Again, 40.05 in the short term, and then 41.78. It is in the original box. Yes, it is. It's completely in the original box with still the original tag on it. It's a collector's item. Market seems inclined to be repositioning. Yeah, this market breadth is really bad. Now, you have a key handful of stocks still lifting stuff up. And you got a lot of still retail driven stuff. That's why I'm very cautious. Now is not the time to be greedy in this market. It's tradable, but I would not get married to positions. Good morning, PMG. XBI failed breakout. Well, XBI, again, slamming into a very key resistance in the 200 area. So I wouldn't say it's failed yet. That is an outside reversal. Outside key reversal, so I would be patient on any long entries and really patient if it closes back below around 84. Until that's, and we have right here. What else? Another thing. So this could continue to pull back. It'll pop up today, but this could continue to pull back into a very key support area. Based off that outside reversal day in the double, I'd be very patient on long entries. You still have a gap behind 2. And if it does hold this 84 area, could be watching for another potential bounce play. But this, short-term breakout slamming to very key resistance. It's not just the 200. So you can see you had a couple days that broke below that level, but it was support here, gap below, reversal here, then broke below. Look at all these tests. Look at these test rejections from that level, and it got rejected from there again. In order for me to remain bullish on the biotech, it would have to get above this 89 area. That's very strong resistance, which was, again, proven yesterday. Coco, Bitcoin to the moon. We've already talked about Bitcoin. Good morning, Ted. Yeah, see, Sterling, when are you you got to take the channel over, Sterling. You got to take it over. You've learned it all. Sterling, you can't take it over right now. You're on vacation. But then maybe I can turn it over to you and I'll take a vacation. Sterling's really got so much of this stuff down. CAG has been decimated over the last 8 months. Any ideas there? Yeah. Patience. I mean, Conagra, it's getting, look at this. They did miss on earnings, okay? So would not be hyper aggressive, but look at the PDE. Conagra is not going away. $8. Dividend yield, 7.22. What I like about this is you do have a longer-term dividend. Now, would I be aggressive just yet with this? No. And why not? I was watching here. Let me show you exactly what I was looking at. You see here, we broke below it and then retested, then sold off. So that is major resistance. At this point, Conagra's on my long-term radar because it's getting priced like it's going away. And it's not. But would I want it just yet? No. I'm watching somewhere in this closer to this 18 area. We got some key support. All right, in there, but we do not have a bottoming pattern. Why am I interested there? Because, again, you start getting down here. I love if it got down to this mid 14 areas. Don't know if it'll do that because there's a lot of support coming in here. But For a longer term, if we start getting some daily bottoming patterns down in here, then I will start looking for stuff because there's, again, it's paying over 7% dividend. So you can withstand some downwards price action. This is also one that if we get down here would be interesting to sell some cash secured puts, because I would not mind taking delivery of Conagra. So I'm joking, Sterling. But then I could have a vacation, Sterling. Think about it. You could easily step in. You could easily step in, Sterling. You could take over the channel, especially on a Wednesday, maybe your day off, you could, but I know you got church, you got jujitsu, but I was just dreaming because you've learned it. You've learned it. And then you're putting your own spin on things. What else do I already covered everything. Well, we'll take a look at Tesla. Keep an eye on Conagra. If you're looking for longer-term dividend plays, be patient, but add it to your long-term watch list. At some point, it'll start getting capital appreciation again, and you'll get the dividend to boot. It's just not there yet. Still looking with Tesla for rollover plays. Yesterday, again, you got to be patient. Yesterday was but not a great setup. Not really anything there. NVIDIA hitting the next minor harmonic and pausing there. NVIDIA is just off the charts again. 4.17 market cap. Would not be shorting it, but would not get married to long positions up here. That's the key when I'm starting to look at it again, because if we start getting pauses up here and start setting up a larger topping pattern, I'll sit up and take notice for the market, because it's really climbing. It's really still leading the market. Is PM coming out? I think you meant out of the rotation zone. PM, it's a flat rotation zone it's in the weekly. This would be a very aggressive along with a tight stop on pure Philip Morris. Okay? Very aggressive. For me, it would have to be start getting above. It's flirting with the level, this 180.25 area. Okay, it's trying to do something. Why am I hesitant on this? Because it's run really far, really fast. I'd rather be finding something closer. This would be hyper aggressive, and I'd be very aggressive with a stop, because if this starts breaking back down, especially below about 178.50, I'd be looking for a pullback closer to the bottom of the rotation zone. Lots of things are still very, very overbought. Would not be, and look at this this is another thing. All right, I do not like chasing stuff at this point. Look how overextended a company like Philip Morris is from the monthly rotation zone. Do not like chasing things like that higher at this point, because we could easily get a bigger pullback in there and then something of a pause. I'm not worried about missing things. I'd rather be patient and get better entries. My thing, again, be fearful when others are greedy, which is what's going on now, is pure greed mode. And be greedy when others are fearful. Right now, we're in pure greed mode. It's tradable, but would not get married to any positions unless it's like a key dividend stock you're going to hold. Again, key dividend stock. Let's say this dropped towards the 50. No problem for me. All right? That would not be a problem. Altera. We've talked about it many times. 7% dividend can offset, you know what, a decent drop. I like to pick my entries still longer term. Would I be aggressively buying this here now? No. But again, drops back closer to the 50-week moving average. Be all over that. But this one, I don't need to trail a tight stop because I don't mind a pullback. Would I be putting all my eggs in this basket at this point? No, I would not. If you wanted to start a light position on it, that would be fine. But that would do a partial position because I'd be looking to add on pullbacks. That's one that because I like to scale into some of these. Does that make sense? Like, we talked about, what was it? Park, P-A-R-C yesterday. Would I be parking my money in that crap? No. Do not park your money in that crap. When somebody says, I'd be parking my money more in something like Adhere. Why? Look at the dividend. Can it pull back? Could it pull back 10%? Yeah. But at least you get a 7% dividend that's going to climb on a 10% pullback to offset that pullback. And they're not going away. Would I be investing, again, parking my money in this Palantir, which, again, no dividend and a P to E of 651. Do you think I want to park my money in that? Is it still a trade? Yeah, sure, we traded it. We've traded this in, the slice stuff. Is it something I'd park my money in? No. Coco, I wouldn't even put your money in this. So there's a difference between what you want to build long-term positions and what are tradable positions. This, I wouldn't even be trading this at this point. I mean, look at this on the monthly. It was brief trades back here, a couple brief trades, but at this point, no. Don't mind missing a move. Get that through your head. Never mind missing a move. You'll then be patient and wait for the best setups. There'll always be another trade. Yeah, those CAG puts are juicy at an implied volatility of 74. That's the kind of thing you want to look at. That's what you want to look at. That's why cash secured puts on something you want to own. Do not do it if you don't want to own it. Because let's say it doesn't drop, but the volatility comes in and you get to still collect. Let's say it doesn't drop and you don't get to own it right away. You can still collect some of the revenue stream from cash secured puts. And why are they cash secured? Because you're putting up the capital so you can own it. Yes, if you sell, you have to be ready to take delivery. That's why it's cash secured. You do not. I don't sell naked puts on stuff. Again, naked put is a different thing. You have to have, again, permissions to do that. No, I don't know any brokerage true brokerage that has a problem selling cash secured puts. Meaning you're putting you're saying, hey, if I take delivery, here's the whole amount of money is sitting in my account waiting for possible delivery of that. Selling naked puts, I do not do. I do not sell puts against stuff. I only sell puts in context of spreads because they're spread off against something. I do not sell naked puts. The only time I sell puts, they're technically naked puts, but you're putting up the capital behind it, so they're cash secured puts. And that's only on stuff I want to own or wouldn't mind owning. So please keep that in mind, and thank you for pointing that out, Sterling. But that's a great way to generate some extra potential revenue while you're waiting for stuff to come into your buy zone on some of these longer term things you want to build a position. With that, let's just peek at the open. Let's just peek at this stuff. Right now, still stalling out above the 50% harmonic. Again, we start breaking above there. If we can start building a base above 6,300, My next target, this is intraday only, 63.10. If that can happen on a pullback, I'm watching this 15-minute rotation zone. Yep, there you go. If you sell a 19 put in Conagra, the buying power reduction will be 1,900 minus whatever you collect for the put premium. You're welcome, Charles. Again, I really appreciate everyone tuning in. Thank you for posting all that stuff. I know you're on vacation, Sterling. I really appreciate you as part of the channel. Everybody, give Sterling a shout out. You don't have to do it right now. That I'm going to stop the stream, but give Sterling a shout out next time he's in here for continuing to support the channel while he's on vacation. Really appreciate that. Everyone, remember unemployment numbers and retail sales tomorrow. And then option expiration on Friday, which will free us up for potential bigger moves next week. On a caveman trading futures, well, you can learn options in your spare time. That's what's wonderful. There's no rush. They're not going away. So you can learn this stuff. All right. Again, thank you, everyone. I really appreciate you all being here. If anybody remembers, could you come back and leave a comment on YouTube, not the live stream, but leave a comment after the video is archived, please. Thank you for doing that. Bye for now.